Welcome, everyone. Get ready for a deep dive analysis that is going to completely transform your Amulet investment strategy. Today, we're demystifying the complex world of tax regulations for Amulet investors. Our ultimate goal? To build a bulletproof shield around your portfolio, protecting you from those dreaded retroactive tax audits. Grab a pen because what we're covering today will help you secure your profits 100% legally. Let's get into it.
I want to kick things off with a pretty blunt question. In the eyes of the Revenue Department, are you an heir holding on to family treasures, or are you a commercial trader out to make a profit? Now, your personal feeling doesn't actually matter here. What matters is that this is the legal dividing line that completely dictates how your assets are taxed. Get this wrong or fail to prove your status, and the financial hit could be absolutely massive.
Okay. Let's dive into this. Here is our structured roadmap for today. We'll be breaking down collectors versus traders, the golden 10-year rule, commercial certs versus lab reports, how to legally upgrade to a professional, and finally, a risk reduction checklist.
All right, let's jump right into part one, understanding that crucial legal distinction the Revenue Department makes between a collector and a trader. You see, the Revenue Department doesn't really care how many amulets you have in your collection. They're looking for two specific things: time and documents. If you don't have rock-solid documentary proof of how long you've held an asset, their system automatically defaults you to being a commercial trader. And trust me, that is a tax category you do not want to be forced into without preparation.
And here's why. This is the biggest financial trap of all, the flat rate tax assessment. If you get dumped into that trader category without clear cost records, the Revenue Department just applies a flat rate tax. They won't care if your profit margin was tiny or even if you sold at a loss. You'll be forced to pay generalized taxes based on your total revenue, which could easily cost you more than you actually earned. This is exactly why staying out of this default category is absolutely vital. So, what is the solution? Let's move on to part 2 and talk about the ultimate protective benefit for collectors, the 10-year rule. 10 years. Burn this number into your memory. Legally, if you can prove you've held an inherited or collected amulet for over 10 years, selling it grants you a complete 100% income tax exemption. That's right, totally tax-free. But the catch? You absolutely need verifiable, documented proof of that timeline. Just taking your word for it simply won't fly. Which brings us perfectly to part 3. What kind of proof actually works? Because not all certificates are created equal in the eyes of the law. Let's compare standard commercial certs with scientific lab reports. And this brilliantly illustrates the difference. Those standard commercial certificates you use in the market, they basically just offer an opinion-based consensus on whether an amulet is authentic or fake. But a scientific lab report, that gives you elemental data, exact mass, a traceable QR code, and most importantly, your exact name right there on the document. The Revenue Department only accepts hard, verifiable science when it comes to tax reductions. So, what exactly makes a lab report legally binding? It really comes down to 4 mandatory elements. If you miss even one of these, the Revenue Department can just reject your paperwork. Let's break them down. Step 1 is credibility. A basic rubber stamp from an association just doesn't hold up legally. You need documents from a recognized legal entity, ideally adhering to international ISO/IEC 17025 lab standards, and it needs to be signed by an actual scientist. That is the level of proof the courts and the Revenue Department respect. Steps 2 and 3 are all about the data. The Revenue Department actively rejects vague, opinion-based critiques. They want cold, hard statistics to prevent fraud. We're talking high-resolution photos mapping every dimension, precise decimal weights, a database-linked asset ID, and XRF analysis showing exact elemental percentages. They literally want to see the calcium carbonate crystal structure. Science doesn't lie, and that's exactly why they trust it.
And step 4? This is your ultimate shortcut: ownership and timestamp. The name on the lab report must perfectly match your official tax ID. And the exact date on that inspection report, that acts as a literal starting gun. It officially starts the legal holding period clock, paving your way toward that glorious 10-year tax exemption we talked about earlier.
Now, what if you are making the leap into trading regularly? Let's shift our focus to upgrading to a professional.
If you're buying and selling amulets as a regular business, you desperately need upstream legal protection. The very first thing you need is an antique dealer license, which you can easily get from your local district office or police station. This makes all of your commercial activities completely lawful and transparent right from the start.
So, the crucial point is this.
As a trader, yes, you pay taxes, but you don't have to pay that brutal flat rate. If you are meticulous about keeping your purchase documents, bank transfer slips, and contracts, the Revenue Department lets you deduct your actual costs. This means you only pay taxes on your real profit margins, which is totally fair and saves you an absolute fortune.
But watch out, because there's a huge landmine here. 1.8 million baht. The law is incredibly clear. If your total annual revenue, and I emphasize revenue, not just profit, crosses that 1.8 million baht threshold, you are legally mandated to register for a 7% VAT. Ignoring or missing this is the #1 reason investors get hit with agonizing retroactive taxes and massive fines.
All right, let's bring it all together. Here is your definitive risk reduction checklist.
This right here is your ultimate tax survival guide. #1, upgrade those commercial certs to scientific lab reports. 2, ensure the names on the reports match your tax ID exactly. 3, archive every single bank slip and purchase contract. 4, apply for that antique dealer license if you're trading regularly. And 5, monitor your annual sales like a hawk so you don't blindly cross that 1.8 million VAT threshold. Follow these steps and your portfolio will be rock solid.
I want to leave you with this final provocative thought. Is your Amulet portfolio, which might be worth hundreds of thousands or even millions, actually legally protected against retroactive taxes right now? Or are you still hanging your financial safety on outdated certificates? Knowledge is only power if you use it. Go review your assets today, take action, and secure your financial future. Thanks so much for joining me.